Hello friends, this is Raj Sastri from Raj Option Trading. Today is March 25th, 2022. Let's take a look at top gaming and social media stocks. Look, according to Motley Fool, we got three growth stocks, Roblox, Pinterest and Snap, all down more than 50% from all-time high. So some of these could be good stocks to buy. We will take a look. And you got housing market, which is in a tough time right now. We got first time home buyer inventory expected to rebound back in 2024. And with that, let's take a look at top social media and gaming ETF. From a gaming ETF perspective, we got Espo, which is one of the bigger ETF. Look, they got about $478 million under asset, and it's down more than 23% from 52-week high. That tells you it's completely sold off here in the correction territory. And then we got SOCL, social media ETF, again sold off big time. Look, down 50% from 50 to 40% from 52-week high. We got to ask the question: is it good time to buy some of these top stocks in this area and go from there? So with that, let's jump in here. Look, from a broader ETF broader index perspective, we got Dow Jones Industrial Average, down last 3 months or so. Look, lower lows, and now it's trying to make a comeback slowly. Market is choppy right now, trying to decide where to go. This week is really in the trading range, and similar trend in other areas like S&P 500, Nasdaq, similar territory. Even though Nasdaq is a little more stronger than other areas, and then you got Russell 2000, a little bit choppy as you can see here, and it's down significantly in last 3 months or so. Long-term trajectory is still good here. I think all these dips are good buying opportunities if you're a long-term investor. So with that, let's jump in here and look at these social media ETFs. Look, from a social media or starting with the gaming here, I got a 2-year, 1-day chart. Back in 2020 and 2021, these gaming stocks were exploded on the way higher, as you can see here. And then they started thinking where to go in 2021. 2021 was the time when folks are coming back from staying at home. That's why stock started going sideways, and 2022 it came down big time, and now they're trying to rebound. This is this is when you have to ask: is it a good time to slowly start buying, or the turning around slowly? And similar trend in the social media. Look, social media is 2020 was a okay year, it did well, and 2021 also it went higher, but then promptly it came down in 2021 later half, and 2022 now it's trying to rebound. On the balance volume perspective, both these ETFs have got steady on the balance volume. That tells you buyers are buying for the long term and positioning their portfolio for a good rebound. So that's when you have to ask, should we buy some quality stocks in this area and go from there? Look, from a stock perspective, we got few stocks. Starting with the gaming area, we got SE. It used to be one of the quality stock a while ago. Look, it's down big time. Look, it's down 43% or even 53, 50, 67% from 52-week high. They got $11 billion cash. They're not going anywhere. Free cash flow positive, and it's also good from a industry growth perspective. Middle of the range here, number 5. Profitability is number 7, and valuation is low, number 3. And look, company has got nice gross margin, net margin negative. This is one of the reasons Wall Street does not like it. Look what's going on off late. It's trying to rebound in a 1-day, 5-day, 10-day time frame. Nice rebound of 25%. At this time, you can buy one or two stocks when the market is down big time and accumulate this quality stock, for the long haul. Understand there'll be some short-term pain, but this is one of the better stocks in this area. And then you got Electronic Arts or EA. Electronics Arts is a one of the good stocks. As you can see here, Electronic Arts is doing pretty well. It's the industry leader. Look, it's got the number 3 rank in the profitability here, number 2 rank in the growth, and number 3 rank in the valuation across the industry. It's got net margin positive, companies making money. Wall Street likes these type of companies. And look, it's got $3 billion of cash. And look at the free cash flow. It's a leader in the free cash flow in this area, doing nicely from a free cash flow perspective. Right now, as you can see here, RSI perspective is 48. Tells the stock is sold off here. I would be a buyer of electronic arts here. They are going to do pretty well. And then you got hyper growth name here, Roblox. It's also a metaverse name, as many of you know here. Look, this is down 64% from 52-week high. Ouch, that must be hurting really bad. And they got a lot of cash, $3 billion cash in the balance sheet, and free cash flow positive. I think this could be a good one to buy for the long haul. Understand there'll be pain in the short term. And then we got a few more here. We got Take-Two Interactive, which is one of my favorite. It's off late, it's not doing great as you can see here, but now it's trying to turn around. Look, it's trying to turn around here. Nice 15% net margin, one of the better names with the good net margin. But look, it's down 23% from 52-week high. And look, they got a lot of cash, $2.4 billion cash. Right now, free cash flow negative. They can turn positive anytime. But from an industry perspective, these guys are industry leader when it comes to growth. Number 1, top rank goes to Take-Two Interactive. Right now, it's a little bit in pain, given RSI is just 42. That tells you stock is sold off big time here. And then you got 2 more here, which are a little bit, volatile stocks, as many of you might be knowing. We got PLTK here. PLTK is a $18 stock. Look, this is right now, it's a positive free cash flow, one of the better companies. Stock is down as of now, down 38% from 52-week high. Look, they got a lot of money, $1.1 billion of cash here on the balance sheet, and $452 million of free cash flow. I think this is a good one also for the long haul. And then you got Avid. Avid, it's a good stock, but look, it's gone up so much in last 10 days, 31%. And right now RSI 70. I would be waiting for a little bit pullback here. It went high too much too quickly, so that's why I would be willing to wait on this and buy on a dip. And then we got our social media stocks. Look, we got Google on the top. Many of you know Google. It's a very famous search engine. And look, it's doing nicely. They got a lot of money here. $133 billion cash in the balance sheet, and $67 billion of cash, free cash flow, industry leader when it comes to profitability and growth, and even valuation is low. I would be a buyer of Google in any small pullback here and accumulate nice position in Google. And then you got your Facebook or Meta. As you all know, Meta came down big time here. They got challenges with the Apple iOS privacy, and now Android privacy rules. Look, it's still an industry leader 111. That tells you across the industry in profitability, growth, valuation, it's a leader. Right now, RSI is 53. Stock is trying to rebound in 1 day, 5 day, 10 day. I would be a buyer of this one also here on any pullback. Facebook is going to do well. Look at the amount of cash they have. And Mark Zuckerberg is slowly trying to improve the company. And then you got a few more. Etsy used to be a Wall Street darling. Everybody wanted to buy face masks from Etsy. But look, it's down big time, 54% from 52-week high. And it's a free cash flow positive. They got around $985 million cash on the balance sheet. And look, in the short term, they're trying to go higher slowly. But at these levels, it's a rebound story. I would be a buyer of Etsy at these levels here. And then you got Snap. Snap, as you know, it's a good company. They're trying to slowly turn profitable, as you can see here. Right now, net margin is negative 12%. But look, they are a free cash flow positive company now. That's a good story. They got about $3.5 billion on the balance sheet. That's also good here. It's not the old Snap anymore. They're trying to be profitable. That's always a good thing here. I would be a buyer of Snap. And then you got here Twitter. Twitter is used to be Jack Dorsey's company. Now we got a new CEO for Twitter. and he's trying to turn around. Look, stock is trying to turn around in 1 day, 5 day, 10 day, still off big time, 47% from 52-week high. Negative free cash flow right now. That's why Wall Street does not like it. Company also has got negative net margin, just 4%. I can see this turning to be positive net margin and positive free cash flow pretty soon. That's why expect some short-term pain, but on the pullback, you could buy some Twitter and go from there. And then you got a few more here. We got Match, similar story here. Match is it's a dating company, as many of you know here, and it's also free cash flow positive. They got a lot of money on the balance sheet, $827 million of cash. It's also trying to rebound right now, as you can see here. Nice rebound in the near term, and RSI is 55. I'll be buying this also on a pullback. And then we got a few more here. We got Pinterest, again, one of my favorite here. Stock has come down pretty hard, as you can see here. Look, 70% down from 52-week high. And they got a lot of money on the balance sheet, $2.4 billion, free cash flow positive, as you can see here, and net margin 12%. So that's a good position to be in. I would be a buyer of Pinterest here. It's a good one for the long haul. They will do great. I know a lot of people who love to use Pinterest because it gives them the inspiration for new projects. And then you got a few more here. We got SPT, Sprout Social, which is one of my favorite stock here. Has been doing not so great of late, down 44% from 52-week high. They do have some money in the balance sheet and free cash flow positive, but the problem is net margin negative right now. That's why Wall Street does not like these companies. But look, it's trying to turn around, as you can see, a nice turnaround in the last 10 days. On any pullback, you could buy some Sprout. They will do very well as you go forward. It's a Sprout Social, not the vegetable stock. It's a good one to buy. And then you got a few more here. Look, we got IAC, which is a serial, they spin off companies pretty well. Stock has been down, as you can see here, 44% from 52-week high. A lot of cash on the balance sheet, free cash flow positive. Look, nice 16% net margin. Company is trying to rebound here slowly but surely, and stock is down with the low RSI. I would be a buyer of IAC here at these levels. And Bumble is a good one, again, a dating site, as many of you know here. Right now, stock has gone up pretty quickly. Look, 24% up in 10 days. I would be waiting and watching, let this cool off, and then I'll buy. And then you got a few more. These are into internet content. We got Dash or Doordash, as many of you know here. Stock is trying to turn around here. Look, they're down 55% from 52-week high, squarely in the correction territory. On a pullback, I would be a buyer here. Right now, RSI 61 tells you wait and watch. You'll be rewarded if you wait for a pullback here. And then you got a few more here. Spotify, as you can see here, stock is trying to go higher. They got some positive news, as Android is letting them take the payments from their platform. So at these levels, it's a good buy. RSI is 51. You could slowly buy on a pullback and go from there. Look, net margin positive. Net margin is barely negative. It can turn positive anytime. And you got Zillow completely sold off here. You could slowly buy some Zillow on this downturn here. Most of the negative news is baked in. They're exiting iBuy, home buying market, home flipping market. Look, stock is trying to turn around slowly. At this time, given RSI is relatively low here, you could slowly start buying some Zillow. They will do well long run. Right now, free cash flow negative, net margin negative. That's why Wall Street does not like it in the short run. And then you got Cargurus. It's one of the better run car vending machines. Look, it's a positive net margin company. Look, 12% net margin, and they do have $322 million of cash. And look, it's a free cash flow positive company, and they got low debt, as you can see here. So unlike some of the other car vending machines, this one is a little more better run company with the lower debt load. All right, so with that, let's jump in here and look at few stocks. So when it comes to gaming market, video gaming market, one of the leader is Electronic Arts, as many of you know here. Look, Electronic Arts is trying to run sideways right now. Look, it's a bottom here, and we got one more bottom. It's trying to go off of it and bounce higher. And look at the on the balance volume here. On the balance volume is one of the my favorite indicator. It's telling you more people are buying electronic art. So at this time, I would be a buyer of electronic art here. Stock is trying to rebound. They got a nice support level here around say 120 or so. It's trying to rebound off of the support level. It's a good one to buy. And we got Take-Two Interactive, again one of my favorite stock here. This one also has found a bottom around say 140 or so, trying to bounce off of it. And also on the balance volume perspective, there are more buyers of late. It's also a good one to buy. And we got Roblox here. Look, it's a train crash here. Big time down. Now it's trying to rebound. Look at on the balance volume. It's also trying to rebound. So at these levels on the down days, you could slowly start buying some Roblox. It's got nice potential as you go forward. And then got Avid. Look at Avid. Look, its stock is traded sideways for a long time. Now it's trying to have a nice rebound. I think it's a little more parabolic for me. It's too much too quickly. I would wait for a little pullback. Given RSI 70, I think it's good to wait for a little bit pullback and then buy Avid. All right, now we got few more here. We got Doordash. As many of you know, Doordash is a good company. It's look. Let's see if we missed something here. Okay. All right. Let's go to Doordash. Give me a quick second here. All right. So Doordash, as you can see here, Doordash has done well back in 2021. Look at the upswing here, nice upswing. Look what's going on in the later half of 2021 and 2022. Came down pretty much, and nice consolidation pattern, and now it's going higher. In the meantime, on the balance volume is pretty steady here, and now it's trying to go higher. So at these levels, I think it's okay to slowly put some money into DoorDash on the down days. These guys will do well. They're one of the leader in the delivery space here. And then you got Zillow. Look at the train wreck here. Came down big time. Big downtick here after the earnings, and they lost a lot of money flipping the houses, and now it's in the consolidation pattern, and a nice rebound from the consolidation pattern. Folks are now trying to jump in and buy some Zillow here. It's a good one to buy at these levels here. And then we got Cargurus, one of the better internet vending car machines here, vending machines for car. Look, stock is has a nice upswing here, came down nicely, and is trying to bounce off of these levels here around 38 or so. I think at these levels, look at the on the balance volume. It's also nice and steady here. I would be a buyer of Cargurus. It's one of the better companies here. And then you got Spotify. Spotify, look, stock is traded sideways for a while, went a little bit higher, big train wreck here, and now it's trying to consolidate and try to go higher. At these levels, Spotify is a good one here. They also struck a deal with Android and Google around the payments for the Spotify. So I think it's a good one to slowly start buying. They should do well as you go forward. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.